Commissioner Gorelick.
Mr. Degman, it's good to see you again. Thank you very much for your testimony today and for your thoughtful comments. While I might wish to return to the body of what you've presented us today, I would like, I think, to focus on the role of the insurance industry in getting the private sector to where it needs to be. The chairman noted at the outset that the national security of this country sits on a bed of infrastructure that is owned privately. And that is a signal challenge to all of us. How to get the private sector to do what it needs to do to harden itself against attack, to ensure that it has procedures to mitigate the harm if there should be an attack, to make sure that it responds appropriately to protect its people and its facilities. That is, I think, the largest challenge that we face in the subject matter of the hearing today. And I come at this not only as a member of this commission, but as the co-chair of a commission with Sam Nunn on critical infrastructure protection in the late 90s, where we looked at this, and we're very frustrated by what we saw as a lack of incentives for industry to do what we thought needed to be done. Now, traditionally, your industry has led the way. Where there is a potential harm that can be mitigated, there have been incentives in the pricing of the insurance product that lead a business to say, well, this is cost effective to do. The governor came before us and laid out a broad consultative process with industry. If I had had the chance to ask him a question, I would have said, you have cash-strapped companies in your state. What is going to make them, besides a sense of duty to their employees and patriotism, which are good motivators, but only go so far when you're trying to manage a business, do what they need to do? And so that's what I'd like to talk to you about. When it became clear that if you had airbags in your automobile, your losses would be lower if there were an accident, and therefore the insurance company would give you a cut of your rate. Same thing with fire alarms in your house. Where is the industry in establishing a set of best practices that companies can use to aspire to and to try to get their procedures so that their people and their facilities are protected and hardened? Do we have a set of best practices, and do we incent companies to adopt those best practices?
It's a great question, Ms. Gorelick, and I think it does focus on exactly the right issue, both from an overall economic impact of terrorist incidents and on the insurability of those losses. Let me answer your question first bluntly and honestly. There are no standards nationally available that deal with all terrorist events. There are, though, a number of initiatives underway that deal with standards for what I would refer to as conventional terrorist acts. That would exclude a nuclear, biological, radiological attack, which raise questions that are much more difficult to address from a standards point of view. The federal government has taken some steps by virtue of creating working groups around certain kinds of best practices to disseminate information about the availability of those kinds of protective or precautionary devices. There are groups like the National Fire Prevention Association that are developing best practice safety and physical security recommendations that would help mitigate the magnitude of a loss from a conventional nuclear attack. And while I've said that there are no standards available, effectively today, much of what you've suggested needs to go on is going on with respect to conventional terrorism and property risks or business interruption losses that would flow from those property risks. So, for example, at Chubb, and I think this is pretty typical of the insurance industry today, we have loss prevention control experts. Before we write a risk, we send them out to do an analysis of the structure and the procedures that are in place in that structure. based on their findings, if they've made a determination that the company or insured has taken precautionary security measures, and I'll list some of them for you, we will write that risk more willingly. We'll probably write it with a smaller deductible so that the insurance dollar comes into play at a lower dollar loss. We'll probably provide more limits if the insured wants higher limits available for the loss than we would if the risk were greater in order of magnitude because of an absence of security devices. So some of the things we look at would be, do they have a disaster recovery plan? Financial institutions, by the way, are mandated by the federal government. And many of those that lost all of their assets in the World Trade Center, and many of their employees were up and running and doing business within a matter of 72 hours.
Most of them here in New Jersey.
After the loss. Many of them coming to New Jersey to use space in order to do that until they could get back to New York. Where's the company's physical location? Is it in a high-risk, high-profile building? Or is it even within a high-profile city but a less high-profile building? Does the company do evacuation drills on a regular basis, something Governor Kane mentioned? Are delivery vehicles authorized to be on the premises? Are there physical security barriers that prevent access to the building? Do companies use employee screening processes to monitor who they hire to protect themselves from self-inflicted terrorist events? Are the ventilation systems properly protected? Do they use reflective paint in the stairwells so that people can evacuate the premises more quickly? Are chemicals stored on the premises? And if so, how secure they are? Our loss control folks look at those things and then advise the underwriters with respect to the underwritability of the loss. Again, only against a conventional terrorist act would I argue that you can responsibly underwrite. But we do take into consideration where state law allows, and it doesn't always, us to adjust a price based on that, certainly to provide more favorable terms and conditions to an insured who's taken those steps. So there is an economic incentive. Apologize for the length of my answer.
No, I had a lengthy question. You're entitled to a lengthy answer. Would it be more powerful in moving industry to implement state-of-the-art evacuation procedures and the hardening of buildings against attack if there were a clear and more universally accepted set of standards? I mean, you've indicated there's a proliferation of information and that your underwriters make a qualitative assessment. But my concern is that the lack of clarity and the lack of unity as to what is the right thing to do breeds a lack of incentive and impetus to do what needs to be done.
Clearly, I think there's not much doubt that a uniform national set of standards that governed property exposure to conventional nuclear attacks would be desirable for the insurance industry and, more importantly, for the companies that have responsibilities to their shareholders and their employees to provide an environment which is safe and allows them to continue to conduct business. That does not exist today.
And that would be for all manner of terrorist attacks. And
well, it's easy. It's not easy, but it's much more. It's easier, frankly, to get one's arms around a set of standards in the face of conventional terrorist attacks, such as an attack on a property or a building or a particular company.
And yet we know
much more difficult than radiological, nuclear, biochemical attacks to devise what those standards would be. We have not been able to do that.
But and yet we know that even such basic standards as standards for evacuation procedures, standards for the construction of buildings, where the attack could be with a much more conventional weapon, don't exist, and there are few incentives to make them exist. Isn't that true?
Yes, but that's not a reason not to do it. I didn't mean to suggest that. There are, a precedent would be the Uniform Fire Code, which provides standardized sets of procedures and best practices, and I actually am recommending and supporting the notion that we ought to have such.
Now, you mentioned a regulatory barrier. Is there a barrier for the insurance industry to offer price incentives to companies that abide by best practices? Let's say if there were a set of best practices out there?
You know, the insurance industry is regulated by 50 different state regulators. It is one of the few major sectors in our economy that requires public oversight that's not done at the federal level. Chubb and many of the companies in our business would support a federal optional chartering system which would allow one federal regulator to oversee insurance regulation. But the answer to your question is yes, there are barriers, because in many states, commercial property forms need to be filed in advance of their being put on the market. Rate structures in many states are very minutely regulated and controlled by the state departments of insurance, many of whom are very slow to respond and insensitive at times, not all of them, to the exigencies that require a quick decision. So I would pose that to you as a significant barrier in the ability of the private sector to respond to the normal marketplace impulses or factors and developments that we would want to respond to.
Well, that's a very helpful answer and very concrete. So far I've taken from your testimony, in addition to the concerns you've raised about TRIA, that while we have a lot of information out there about what might be the best way to protect ourselves, we don't have any coalescing around a set of standards that can be implemented, if you would, by the insurance industry. And even if we had the standards, there are regulatory barriers to offering very clear-cut price incentives to companies to adopt such standards.
Potentially, and I would focus not just on price, but on terms and conditions. Many companies are willing to pay whatever it takes as long as they can buy enough insurance and they can have it attach at a level which doesn't render them insolvent before the insurance comes into place.
Well, I accept that perfectly. It seems to me that more broadly, one could call it financial incentives to do what is right. I noticed that the Business Roundtable in April came out with a call on boards of directors to make security a key part of corporate governance. And you probably have a window into corporate America that most people don't have. In the report, it notes that security generally is a responsibility of someone fairly low down in the organization, not someone very close to the senior leadership and certainly not close to the boards of directors. And it generally calls on corporate America to change that and to make security an important part of corporate governance. Has that happened?
It certainly happened at our company. I chair the internal security caucus group that overlays all of the departments of the company. Our board requires an annual update now on the status of our disaster recovery planning and our business continuity planning as well. I don't know for a fact, but my sense is, as an insurer of many companies' directors and officers' liability, that boards are treating this as a board-level matter for attention these days, and when that happens, inevitably, the management of a company treats it as a critical imperative. Certainly in publicly traded companies today, a director would be taking a risk in terms of liability and not assuring himself or herself of the adequacy of the planning measures and security measures that a company should take. So I suspect it is happening. I was taken by Governor Kane's remarks at the beginning that many of these things do not seem to be evidenced in surveys that are done. From our perspective, it's much different, much better, and much more engaged than it was before September 11th.
Do you at Chubb or do you as an industry have data that reflect these changes? Because the data that are available to us are not particularly consistent with that assessment. I don't have any reason to question your anecdotal perception, but the data seem to reflect that little has been done. And if that were true, it would be of significant concern to us, and we would address it perhaps differently if we had different facts.
I wish I did. I don't. It was anecdotal. The one empirical piece of data that I could refer you to is the fact that about 80% of our insureds are buying terrorism coverage. That says to me that there is an awareness of the risk on the part of the customer and a willingness to pay a price to secure at least economic protection against it. If they have that, one would surmise that they are incented highly to minimize the risk as well as buying coverage for it,
if they're behaving rationally.
which not all do.
Occasionally is not the case. Mr. Degman, I want to note that the record of Chubb's activities in the days following 9/11 is really an impressive one. And, I've read Steve Brill's book and read your account of what occurred and the business decision that you made that reflected the values of your company, which was to step up to the plate and fulfill the commitments that you had made to your insureds. Your testimony, in part, urges us to look forward to the unhappy possibility that this is not a one-off event. And most of the witnesses whom we have heard from in the course of our inquiry so far, who are experts on terrorism, say that no matter what we do, to one extent or another, some additional attacks in our country are inevitable. And so my last question to you is this: do you think that your industry could and will respond in the same way in the future, which was with, if I might characterize it, a sense right off the bat that it was the right thing to do to pay these claims? Do you think that you and your industry will be able to act in the same way in the future?
There will certainly be a desire to act in the same way in the future on the part of not only Chubb, but of almost every company, particularly domestic companies in the industry. Whether we're able to or not is the more fundamental question. It's very interesting to me, and the insurance industry is not a very popular industry in this country, to be honest. When I came to Chubb and I went to a party afterwards, and someone said, well, what have you done, John, with your career? And I realized I had to say I'd been a politician, a lawyer, and now I'm an insurance company executive. I tried to change the subject. When September 11 happened, within a matter of days, the airline industry secured a limitation by federal law on its liability defined by its insurance liability standards. So Congress essentially said, pay all of your limits, but you don't have to be exposed to any liability. Even Mr. Silverstein, the owner of the World Trade Center, from Congress, got a federal bill which limits his liability to his insurance proceeds. The insurance industry did not at the time ask for any assistance in paying these losses. We said, notwithstanding an unknown dimension of those losses, we will pay them. And in fact, sitting here today, I'm very proud of the fact that we have and are continuing to pay all of those losses. What we asked for was help against the next one, because these aren't insurable risks. They're government responsibilities to protect its economy and its people. It took us till November 2002, and only at huge political price, to convince Congress that they should provide a mechanism to soften the economic blow on the next event so that we can meet the promise in the same way we were able to do from our own assets on September 11th. Absent TRIA, to be very candid with you, and in the event of a catastrophic loss in the order of magnitude of the World Trade Center alone, much less the greater one that we all know could happen, there are many companies in our industry who will not be able to honor that promise because they won't have sufficient assets to do it. The last point on this, what an underwriter generally does is try to dimension what the ultimate loss could be. How much is the building worth? What would it cost to rebuild it? How long will it take their operations to get back up in operation so that their business interruption? And we try to put a price to that. It sounds like a mechanical process, but it's a fairly sophisticated process. And then what we do is try to price against the probability of that loss. Now, in terrorism, we can generally dimension the potential loss. We can make a projection of how much is likely to be lost. What we can assess is the probability that that loss will occur. And unless that critical component of the underwriting process can be empirically demonstrated, one can't price the risk. And therefore, if you can't price the risk, you can't assemble the pool from everyone who wants insurance that allows you to spread the risk to the few who are hurt. The fundamental proposition I'd like to leave with this commission is, yes, the insurance industry will do what its contracts oblige it to do. We'll do even more. We'll do all that we can. But it would be wrong to rely on insurance as the softening mechanism again against economic terrorism that it was after September 11th. We won't be able to.
Thank you for your testimony.
Thank you.
Thank you, General. One last question, and that comes from Secretary Lehman.
Thank you, Mr. Degman. I have a double-barreled question following on to Commissioner Gorelick's question. As we examine the vulnerabilities and the inadequacies of the private sector emergency preparedness and crisis management, that the lessons are being drawn from 9/11, we face really two contending schools of what to recommend. One is government mandates and regulation on compliance, other kinds of compliance such as corporate governance certification and so forth, on the one hand. On the other hand, seeking standards that to become enforceable from the private sector. And the reason why the insurance industry is of such interest to us is, as one of the most regulated of industries, they also have evolved, the industry has evolved some of the best standard setting and rating entities like ISO, Insurance Services Office, and so forth. Does the structure exist within the insurance services industry and the industry itself to provide the kind of ratings such as you did after Hurricane Andrew and so forth for building code compliance, and to provide the answer to these concerns that we have, so that you'd have a direct mechanism for rating a skyscraper as complying in fire drills, building codes, compliance inspections, and so forth? Or is it, do you feel we have to depend on the federal government to do this for our overall private sector problem? Because we're going to recommend one direction or the other, or some combination. And the second is a related part of the question. Do you, in your underwriting and your evaluation that you so effectively described in writing and underwriting for these kinds of policies, find a significant difference between regulated industries like utilities on the one hand? Are they better at it because they're regulated compared to other industries that are totally unregulated?
On your first question, Mr. Secretary, I believe that the expertise exists within the property and casualty industry today to devise consistent standards for conventional terrorism risks. We are, notwithstanding the highly regulated environment in which we work, though, fiercely competitive. And we are business people, ultimately. We find it sometimes very difficult to put that down, to coalesce in one group, and we run some antitrust risk when we do, to say that there's a common set of standards against which we will all underwrite. So there are antitrust considerations to be taken into account, and there are competitive considerations to be taken into account. If in combination with a federal regulatory entity or some other consolidating unit that was authorized to do that, I can say without any hesitation that the industry would be extremely eager to contribute collectively whatever expertise we have in handling losses in the past or this one to that process. And I do think that we would all be aided and better informed, and that the country would be better off if there was such a set of standards that could be devised. But while we have the expertise, I don't think we'll be able to do it on our own. So it needs to be in combination with others. As to the second part of your question, without a doubt, in my judgment, regulated risks are easier to write I made the point about financial services institutions where every investment bank is required by the federal government, every bank is required by the federal government to have disaster recovery planning and business continuity plans. That's one of the reasons, to be candid with you, that Chubb is such a large underwriter of financial institutions and why we were the second or largest loss provider and payer in the World Trade Center. These are our kinds of clients. We like them because they have those plans in place. And frankly, as large as our loss was, had they not had business interruption capabilities in place to get them up and running in 72 or 96 hours, our loss would have been much greater. The proof of the success of the underwriting to those kinds of preparedness levels is actually exhibited in the size of the loss that we incurred, which would have been much larger without that. I know less about the utility industry, but I'd hazard a guess, although we're not a large writer of utilities for other reasons, that the existence of disaster preparedness preparation, for example, with them and the increased security around their perimeters make them a more underwritable risk for the companies who do that today.
Thank you.
Welcome.
General.